Risk, but offer potentially higher returns. Municipal bonds, issued by state and local governments, often offer tax advantages. The risk and return profile of a bond depends on factors such as the creditworthiness of the issuer, the maturity date, and the coupon rate. Bond valuation and risk. Bond valuation involves assessing the present value of future cash flows, coupon payments, and principal repayment. Factors influencing bond prices include interest rate changes, inverse relationship, prices fall when rates rise, credit rating changes, downgrades lead to lower prices, and overall market conditions. Bond risk is primarily associated with default risk, the issuer failing to make payments, interest rate risk, changes in market interest rates affecting bond prices, and inflation risk, inflation eroding the real value of returns. Building a balanced portfolio. Most financial advisors recommend a diversified portfolio encompassing both stocks and bonds. The optimal allocation depends on several factors, including your age, risk tolerance, and investment goals. Younger investors with a longer time horizon may opt for a higher allocation to stocks to maximize potential returns. Older investors closer to retirement may prefer a more conservative approach with a greater emphasis on bonds to preserve capital. The importance of research and professional advice. Investing in stocks and bonds requires careful research and consideration. Understanding the fundamentals of each asset class, assessing your own risk tolerance, and setting clear financial goals are critical steps. Seeking professional advice from a qualified financial advisor can provide valuable guidance and help you navigate the complexities of the investment landscape. Don't hesitate to explore reputable educational resources and seek expert opinions before making any investment decisions. The journey to financial security is a marathon, not a sprint, and careful planning and informed choices are key to success. Here are two primary types of stock: common stock and preferred stock. Common stockholders have voting rights in company matters and receive dividends, a share of the company's profits, if the company chooses to distribute them. Preferred stockholders typically have no voting rights but receive priority in dividend payments and asset distribution in the event of liquidation. Preferred stock is often considered less risky than common stock, although it typically offers lower potential returns. Understanding stock valuation. Several methods exist for evaluating the worth of a stock. Fundamental analysis focuses on a company's financial statements, examining factors like revenue growth, earnings per share, EPS, and debt levels to determine its intrinsic value. Technical analysis, on the other hand, uses charts and historical price data to identify trends and predict future price movements. A combination of both approaches is often employed by experienced investors. The risks and rewards of stock investing. The potential for significant returns is a primary draw of stock investing. However, this potential is intrinsically linked to risk. Stock prices can fluctuate dramatically, leading to both substantial gains and significant losses. Market downturns, company-specific problems, and unexpected economic events can all negatively impact stock prices. Diversification, spreading your investments across different companies and sectors, is a crucial risk mitigation strategy. Dollar cost averaging, investing a fixed amount of money at regular intervals regardless of price fluctuations, can also help to mitigate the risk of buying high and selling low.